I want to show you guys how to shop an interest rate. It's not just about the rate itself, but it's the cost for that interest rate. And I want to make it extremely simple for you next time you're talking to a lender. It's called letter A cost, and it's located on your loan estimate at the top left of the second page. Now that letter A cost will show any cost that's dictated by the lender. There, of course, are other standard loan costs like your title, taxes, prepaids, insurance, stuff like that. However, letter A cost is the only cost that's actually dictated by the lender. So we're talking origination fees, points, the processing fee, admin fee, underwriting fee, any other fee that the lender wants to charge or typically charges. That's what you have to be looking out for. So the next time you talk to a lender and they say, yeah, your rate is a 6.875, well, your follow-up question is, okay, what's my letter A cost? Now, I will typically quote rates, and I talk to my borrowers about this. We have a candid conversation about what they could do, their options, but I will always quote a rate without any cost, zero cost in letter A, no underwriting, no points, no origination fee, nothing. However, of course, the borrower does have the option to purchase, to buy down the rate if they want to. In this type of market, I'm not really recommending it because we're kind of slowly trending down anyway, and we probably will be over the next, several years. However, sometimes the borrower wants a lower payment and they want to buy that rate down a little bit just to get their payment maybe $20 to $50 lower, maybe $100 lower, just depends on how much they're willing to spend for that. I don't really believe in buying the rate down a whole lot. You'll speak to a lender and they'll say, yeah, you're at a 6.875 with no points. That's great, but you need to also ask what's in letter A. Just because your loan doesn't have points doesn't mean that they're not charging a $1,500 underwriting fee and a $500 processing fee and a $200 VOE fee, right? So cost is cost. Letter A shows all the cost from the lender. And that's what you really need to compare lender to lender. I have some borrowers call me back and say, hey, I actually spoke with another lender, full transparency, but they said my rate is a 6.875 and you said your rate is a 6.99. Why is that? Well, I said, well, what is their letter A cost? And they say, oh, I don't know. I didn't think to ask that. That's why I'm putting out this video. I think it's really important for you guys to be educated when you're actually shopping interest rates. So there's a true apples to apples. Now, my 6.99 rate might make a lot more sense for you because it has zero cost versus the other guy's 6.875 rate that might have a $2,300 cost. But if you really look at the payment difference between that rate, if he's only saving $30 a month between a 6.875 and a 6.99, and the cost to get that lower rate is $2,300, well, that doesn't make any sense. That's like a 300. So it's like 369, 12, 15, 18, 24. That's a 7-year recoup, basically. Just quick math, top of my head. I hope that's right. I'm going to check this after the video. So you have to be in that loan for 6 or 7 years for that small interest rate difference. Most borrowers are not in the same loan for over 5 years anyway. So why would you pay all that money to save $30 a month when if you end up refinancing in 3 years from now, you would have wasted that $2,300. So anyway, that's why I put out this video, because I've been having a lot of conversations lately with borrowers, that are rate shopping, which is totally fine. You have the right to do that. But at the end of the day, it's not just about the rate itself. It's about the rate versus the cost. It's called the pricing. What is the pricing on my loan? What is letter A cost? That's what you need to ask when you're talking to a lender.